Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, June 10th, 2010. This morning we're talking about Asia and the Pac Rim leading the way. Overnight, China reported a 48.5% increase in its exports, showing signs that economy is still cranking along very high. Now, some people are saying, hey, this could be a one-off. Maybe, this happened because people were buying goods in advance of a potential Chinese yuan increase. And, the fact that China's largest trading partner is the EU, which is currently going through austerity measures. But at this point, this number looks fantastic. All right, now an additional sign that they're growing over there in Pac Rim, and when I say Pac Rim, I'm also including Australia and New Zealand, just because New Zealand overnight, they raised their rates 25 basis points from a record low 2.5% to 2.75%. Okay, the first hike in 3 years. Now, most economists had this number pegged. If you notice from yesterday, I myself didn't think it was going to happen. I thought there's maybe too much risk in the market with the Eurozone and a potential Chinese slowdown, but as we can see, that was very wrong. So we're just taking a look here at Kiwi versus dollar. You can see there was some support I identified at 66 yesterday. Boom, look at this candle. That's a nice move. Kiwi's higher 3% versus yen, 2.82% versus the dollar. So that's a great move there. Obviously, there's risk-taking going on. Carry trades are happening. Take a quick peek at the Aussie right here. Aussie yen is pretty much the bellwether for risk-taking in the market now. In Australia, they reported better than expected employment figures. They had a jobs gain of 26.9 thousand versus an expectation of 20,000. So, these guys are moving. The only one who's really lagging of the bunch is the loonie. As you can see here, the loonie's down against the Kiwi, and it's also down against the Aussie. Now, the reason that is that the loonie is tied to the U.S. and the focus today is sort of over in the Pac Rim area. So that's what we're seeing happen. Just a quick peek here. Euro USD is higher. Okay, breaking through that 120 level. And that's a good sign. This is also risk-taking. There's also news that China, because of the status with the Eurozone as its largest trading partner, it's a vote of confidence for the euro. Okay. In addition, Spain came out with a bond offering the other day, yesterday, that was oversubscribed. So what that means is that it means that there's a lot of appetite to lend money to some of these regions. So granted, they're offering higher interest rates to attract capital, but it doesn't seem like anybody's shying away just yet. So, that bodes well for the Eurozone's for stabilization, and we'll see what happens to that going forward. Next, let's look at the pound here. Take a quick look at pound dollar. Okay, in Great Britain, the Bank of England kept its interest rate policy steady at 0.5%. They also kept its stimulative bond purchase program intact at $200 billion. Now, some might think that this would encourage the pound to be a little bit lower, and you can see it is versus the commodity currencies. But basically, what the market's saying is that they're on the right track here, and this comes ahead of the new emergency budget that's going to come out, where they're expected to take drastic measures to slash their deficit. So who's the big loser today? Well, when I started the blog this morning, it was the dollar. We obviously thought it should be the yen to fall in line with the risk themes, but at one point, dollar was below yen. Let's just take a look at this here on the 5-minute chart. Okay, so you can see that I'm not totally crazy when I write that the dollar was the biggest loser. But if you think about it, the market's reacting favorably to the economic things that are going on around the world. So we've got growth in Asia. That's good. We've got countries in Europe and Great Britain. They're slashing deficits. Okay, and you've got people raising rates. So these are all good things. The market's reacting favorable to it. But what's happening here in the U.S.? Well, we're increasing deficits, and hopefully these guys are going to take a note and say, hey, wait a second. You know what? The market actually likes it when people pare back. Maybe that's what we should be doing as well. So, I get it. We needed to have stimulus to, get the economy to stabilize, but now it might be time to reverse some of these policies. So that's what we're seeing now, and as we know now, the yen is the biggest loser. You can see where it is. We just looked at yen here versus Aussie. All right, we're looking at it versus the dollar. These are 5-minute charts. Okay, overnight, Japan reported better than expected GDP growth of 5% versus an expectation of 4.2%. All right, in addition to the export-led recovery that they're experiencing, consumer spending actually increased to 0.4% gain from 0.3% gain last quarter. All right, so this is leading to the belief that Japanese corporations are going to pick up their spending, which hopefully is going to help employment in Japan. So today was the big news day of the week. I mentioned earlier this was kind of a quiet week for news. Well, today was the exception. And as we're seeing here, there's good data coming out from around the globe. This is very encouraging. But it also kind of raises the question, what are we thinking here in the U.S.? I mean, I know that, politicians, they're, only concerned about, they're getting reelected and things like that. But, if we continue with some of these misguided policies going forward, this could be a problem for the U.S. in the long run. Now, they're also talking about enacting financial regulation, and hey, that's not a bad thing. I mean, everybody thinks that regulation is the anathema to free market capitalism, and you know what? It's not. But what is anathema is overregulation, misguided policies, based on populism. And unfortunately, that's sort of what we're seeing happen right now with the government in the U.S., and hopefully they come out with some practical and forward-thinking policies that look, here's the basic problem. We need to prevent over-leveraging, okay, and we need to prevent excessive speculation. If they can do that without overreaching their bounds, hey, that's great. I'm all for it. I'm a free market capitalist, but, somebody's got to maintain the law, so to speak. So if they do this, it's going to allow the natural economic cycles to take place, and we had tremendous gains there for many years, and with that means you're going to see tremendous losses. The economies move in cycles, and those who try to prevent these cycles from occurring, they're going to disrupt the natural order of things. So that's what's happening today. Hopefully, this is a sign of things to come, and economic recovery is going to happen. But in the meantime, just hang on for the ride. So that's what we've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.